everybody. Excuse me. How y'all doing, man? Throat. Sorry about that. Had to get some of the high quality H2O. Just that thing still lingering on me. Yeah, sorry about that. But welcome. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. It's been a while, man. Y'all know who it is. It's your boy, Aranya Grande, a.k.a. Big Spider. You hear me? You know what I'm saying? For those who ain't been around in a while, y'all like the new background? Y'all like the new background? Big Spider, you hear me? Hey, man, what we going to talk about today? What are we talking about today? We are discussing. I opened up the wrong picture. I opened up the Aranya. I probably been opening up this picture. We are talking about, can you read price action? Can you read? Do you read price action like a steamy novel? Y'all see how I'm reading that price action like a steamy novel over there? I'm reading, studying, taking them notes, and turning them a fancy dance. Y'all see how I'm reading and studying my notes over here? Can you read price action? Do you want to learn to read price action? Well, you're in the right place. Because starting on March 1st, I'm going to start uploading videos. It's going to be strictly on reading price action. Now, myself, as you see in my little notebooky book over here, I trade ICT concepts. See the little ICT logo inside there? You can see, if you probably can't see it, but it says ICT live streams 2023. ICT price action chronicles 2023. A little notes in here, right? So just studying notes. I'm going to be uploading videos strictly on reading price action. The videos will be on the YouTube channel for absolutely free, right? There is a mentorship. If you want to know about that, look at the mentorship video. That ain't what we talked about today. Today, we are going to be talking about how to anticipate price moves and not just what you want, right? So today, move around you. If you look at the what chart are we on? This is the NQ. Let's go to the ES. Right? We're going to put the ES on the daily candles. Right? Matter of fact, what brought this to my mind, right? Let's take a screenshot of this. Let's take a screenshot of this right here. Download image. We're taking a screenshot of that. So that's our screenshot right there. We took a screenshot of that. Now, what we are going to do, we're going to go, and because I don't have a big following, but somebody may be tapping in for the first time, and somebody may have questions. I can read in hindsight. We talking about this. First of all, I'm sorry y'all for not shouting y'all out, man. What's up, Rhonda? What's going on, Sunny D? What's going on, Fabu? Shout out Fabu. Fabu is in another country. I'm just a simple dude from Fort Lauderdale, Florida, man. I don't be expecting people from other countries to be tapping in. What's up, Freddie? What's going on? If that's the Freddie I think it is, you know what I'm saying? Shout out all my folk in PDub. If that's the Freddie I think it is. What's up, Lil Hulk? What's going on, Seawalk? What's going on to everybody who went here and didn't put nothing in the chat? But this is what we're going to do. What's up, Lump? This is what we're going to do. We're going to go back, right? Because, and the reason why I decided to do this is because Sunday on the 18th, right, we was having the third Sunday Q&A session with the Black Spiders in the Discord. And somebody asked the question. Let me share this so that y'all can hear this sound. And y'all, once I share this, y'all let me know if y'all can hear the sound. Y'all put a 1 in the chat if you can hear the sound. Right? Yo, what's happening? What's happening, y'all? What's going on? Somebody put a 1 in the chat if you can hear the sound. So if it said 50 members, I'm trying to see if I missed anybody. I think I got everybody. Okay. Yeah, all right. Max was the last. I got to find a spot. Get my Fibonacci tool. That's Erica. Right. And with my Fibonacci active, 5-minute imbalance. I'm looking, just made it to the, we ain't getting no instant. What are you looking at? It's close to my numbers, but okay, here we go. They told they real different. What instrument are you looking at? But closing, somebody said for the weekly last week, it opened at this price, it closed at this price. That's what I meant by close lower. So in a previous comment, they said something about it was closing lower, so they want to see price go down. And I don't know where that. Okay. Was that it? I just saw a different comment. I just saw a different comment. I don't know where it went. Right there. No. Okay, so it said weekly, daily, 4-hour closure in price action, looking for discounted rate to be hit. Is that correct? Right? So it said the weekly, it said it's closing. Yeah, the closure lower, looking for it to be hit. Okay. And so now I understand what they was. Then they came back and they put in more information. Now, listen to. Now, I didn't only say, nah, we ain't doing this. Listen to what I said. Let price show you what it want to do, and then I walk through. Right? I'm not a financial advisor. I'm not a fiduciary. Read the thing, right? Nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk. You should always consult a financial advisor before making any investment decisions, right? So I don't tell people, nah, price ain't gonna do that. Price gonna do this. I just say, let price show. I walk you through it. Because they ain't gonna sit on algorithms and the internet and tell you what you should and shouldn't do. But I just give you the tools that I have. I share my tools here. Use this right here, right? So listen, you wanted to do something. You want to do something to make you. You're looking at. It's close to my numbers, but they told they real different. What instrument are you looking at? But closing lower ain't a reason just to look lower. You want it to do something. You want to do something to make you look lower, right? You want it to um um like just looking at this weekly candle right here. If I was just looking at this weekly candle, and you see how I paused right there, I was pausing trying to think of a good way to explain it, because I'm not just I'm not just gonna say no, this. I'm trying to explain a good in a you know what I'm saying, a way to help you learn without just saying, nah, you did wrong. A positive way. I'm trying to look for a positive way to say, hey, this what you should do to, you know, read the price and learn how to anticipate stuff and not just wish or want, right? Now let's get back into it. And I would say, like, we rejected off this weekly fair value gap. Strong rejection off that weekly fair value gap, right? We closed above this weekly volume imbalance. See, notice I'm talking about we are respecting discount PD arrays, right? Somebody from the gang, if you're in the gang, drop in the chat right now. What is, when you're respecting PD arrays, what kind of buy program is that? If you're respecting discount PD arrays, drop it in the chat for me, right? All of this stuff right here, just looking at the weekly chart, all of that stuff right there would make me want to see price go up if I was just looking at what this candle did based off of the PD arrays right there, right? Buy program, Slim B, buy program. And you notice what I just said? They said the weekly candle opened and closed lower, so they were looking down, right? So I explained to them what the candle had done, and I said that would make me want to see price go up. I'm anticipating a up move, right? And you see how on that day, see how the chart look on that day, right? And you see our screenshot, them daily candles. Let's get to a daily chart over here, right? Because we're respecting those discount PD arrays. You see what I'm saying? Like, just because we open and close down don't mean, okay, let's look down, right? Then when you go to the daily chart, right? When you go to the daily chart, we pushed up, of course, because we pushed up in the weekly. Then we pulled back down, right? We pulled back down, but we're respecting this order block right here on the daily, right? So we're respecting that daily order block, right? The body's up. I mean, the wick came all the way down here, right? All the way down here, then closed respecting this. This actually a propulsion block, right? Whenever you got a propulsion block, you don't want to see price close below the mean threshold, right? Price closed above the mean threshold, tapped the mean threshold, and then took off, right? Then we disrespected this SIBI and inverted this BISI, right? Both of those is like a bullish move, right? So that would make me want to see us tap these highs, just right. So they said the weekly candle closed lower, so I should be looking down, right? If you are looking down, right? You want to look down. Now, just looking down is not wrong, right? I don't want you to misconstrue that closing down automatically means prices fund to drop, right? If you are looking down, you want to look down for a place to buy, right? And how do you know where to buy? By knowing how to read price. Do you notice in there, I said, what is price doing? On the weekly, it was respecting discount PD arrays. It respected this, it respected that, it respected that. On the daily, it was respecting discount PD arrays. It was disrespecting premium PD arrays. And so, looking at the daily chart from that day, I said all of this because it's doing that. That would make me want to see price come up to attack this high. Again, where's our screenshot? Let's put them side by side. All right. This right here. Let me share it. I got the I don't need the sound no more, so I'm gonna reshare it. I'm gonna reshare it so that you can see the screen again. Because when I share it, when I play the sound, you can't you can't see the changes. Shared the wrong window. I shared the wrong window. Now, this was then, now, and this is today. Make it smaller so it'll look the same. All right. This was then. Can I make this bigger over here? No, I can't. Or just zoom in the other screen. Anyway, you can see it. This was that day right there. That's the order block. Remember the order block that I traced out right there? I said it was actually a propulsion block. Remember I traced that out right there. That's the order block. Right there. That's the order block. And then I said we came up here and we we disrespected this Sibby right here, and then we inverted this Bissy right here. Right. And at the time, remember at the time, this candle right here was that little green candle right there. Right? That little green candle right there. And then if you notice, right here, look at God. Look how this leads into what I was just saying. Remember when I said, right, if Picasso resides here, right? Picasso resides here. Okay, Picasso is up here. That's our draw. Why is that our draw? Because we're in a buy program, and it's showing us we're in a buy program. Why? How did it show us we was in a buy program? On the weekly chart, we said we respected. I mean, we displaced off of this weekly fair value gap. We closed above this weekly volume imbalance, right? And then on the daily, we said, you know, we respected the propulsion block, order block. We inverted the Bissy and we disrespected the Sibby, right? And at the time, we was in here with a little green candle. And I said, if you are looking down and Picasso is on the buy side, meaning your draws to the buy side, you want to look down for a reason to buy. Right? You want to look down for a reason to buy. And when I was talking to my brother the other day, I was like, yeah, I took profit on them puts. I took profit on them puts. But why did I take profit on them puts? Because I saw that the buy program was still intact. The buy program was still intact. So I took profit on my puts. Right? So now, price then comes back down. Right? Remember that we were in a little green candle at the time. At the time record, we was in a little green candle right there. The candle was being made, right? Quick lesson on the power of three. Quick lesson on the power of three. Since y'all here, I'm gonna give you something to take home with you. Quick lesson on the power of three. If you don't, now this ain't gonna be concrete every time, but you have to understand what price is doing. But the vast majority of the time, this is what price, this is the sequence, if you will. I'm freestyling this. I speak extemporaneously. Price will open, right? This is our opening price. We're going to make that orange, right? Price will open. You don't know what the bias is, right? We're just thinking the power of three, right? We're illustrating the power of three. PO3, right? Power of three, right? However you want to say it, right? Price will open. Price will choose a direction, right? Price will choose a direction. I'm going to say price starts to go up, right? Price will choose a direction. Price will start to go up like this right here, right? So price starts to move up. Let's do this. Let's get an arrow. Price starts to move up, okay? When price starts to move up, at this point in time, right? At this point in time right here, this candle come here. This candle looks like this. Get out of here, line. At this point in time right here, this candle looks like this. So power three, price opens. It's going to choose a direction. I don't know what, you know what I'm saying, what the bias is, Tim. I don't know. I can't pick bias. Right? And this works on any candle. Minute, second, hour, daily, weekly, monthly, any candle, any time frame. It works on candles, sessions, days, minutes, anything dealing with time and price. So let's just say it goes no higher than this. That's the highest price goes. And then price turns around. Right? Price turns around. Okay? When price comes back below this opening price right here, right? Let's just say price came all the way to, just say price came all the way there, right? When price comes back below that opening price right there, there is a very high probability that you are looking at a power of 3 negative down close candle being formed. When price trades back below this opening price right here, there's a high probability that you're looking at a power of 3 down close candle being formed. And at this point in time, right, at this point in time, this candle looks like this. At this point in time, this candle looks like this, right? Let's get us some notes over here. Let's get us some notes over here. Now, we're going to say it doesn't go any lower than this right here. The price doesn't go any lower than this for this time frame. It doesn't go any lower than this. And then price and then price turns back around and closes right there. Right. So now closes right there. So now this candle, when it closes right there, now this candle looks like that. That's what the candle looks like. And the power of 3 lets you know that you're going to have accumulation, manipulation, and distribution. That's the power of 3. Every candle is made like that on every time frame. So if you don't know what the bias is, right, you can use the power of 3 to kind of give you a clue of what you want to do. Of course, you're going to have to let some time go by. So if you're looking at daily candle, if you want to know what's going to happen for the week, you may have to wait a couple days, 2, 3, sometimes 4 days before you figure out what kind of week this is. If you're looking at a daily candle, you may have to wait Asian, London, and get into the New York session before you figure out, hey, what kind of day it's going to be. But your accumulation, manipulation, and distribution, in this case, since it's a down close candle, right? When we open, we start to accumulate long positions. How do you know we started accumulating long positions? Because when I said it chose a direction, right? Price, we opened, started accumulating long positions, chose a direction, going up. That move up was the manipulation. So you got the accumulation, you got the manipulation, right? And then when we came back down to the low, we distributed or offset those long positions, right? And then we went back and we closed at or near the low. This is the candle form and this is the bar form. Ignore the little arrow on the end. But you know, like bars, you got the open bar, the high, the low, then the closed bar. That's it in bar form for those who like to see it in bars. Ignore the little arrow, right? You had the accumulation, manipulation, distribution, and then you closed at or near the low. And for those who wondering what it'd be for an up close candle, the manipulation will be the down. You're going to open, accumulating. You're going to open, and you're going to be accumulating short positions, right? How do you know? Because it's going to choose a direction, which is going to be down, right? And then you come back and you trade back above the opening price, and you make a high, and then you come back and you close at or near the high. And your up close candle, that's your up close candle over there. And it'll be the opposite of this. It'll be the opposite of that. Pretty close there. Pretty close. Right. That's your green candle right there. So that's the power of three, how you can use the power of three to kind of help guide you if you're not clear on what the bias is, where price is going to go. Sit back and let price show you what it's going to do. Right? Let price show you what it's going to do. Tim, how would that look? What would that look like in real time? Okay. Ignore the time frame of this right here. Right? Ignore the time frame of the chart. We're just looking at the candles, right? So we're going to look at this section of price right here. We're just going to look at this section of price right here. Right? We're looking at that section of price right there. Okay. So all right. Okay. So we're going to look at this. I'm going to put it on weekly. Matter of fact, we're going to zero it. We're going to zero it back in. We're going to zero it to, we're going to lock it in. We're going to lock it in more to here. Right there. Hate when my stuff don't follow me lower, man. Follow me lower stuff. I don't need all this other crap. Get out my way, other crap. I'm supposed to be talking about something totally different, but I done got sucked into the matrix. I'm sorry, y'all. Y'all know how I do. Y'all know how I do. And I got sucked into the matrix. Okay. I got to get my bearing together. Let me get my bearing. Oh, I could just do this. I could just do this. Move, pint. There you go. I forgot I got replay. I could just do that. I could Just do that, do that, do that. Do that, do that, do that, do that, do that. Okay. So right here, even though we are in bullish conditions, right? Even though we're in bullish conditions, right? Because price is bullish, right? Even though we are in bullish conditions, price is clearly bullish. As you see right here with this down close candle, right? It still plays out. Right? Let's look at it on the daily. It still plays out. Right? So here we go. All right. So here we go. This is the first let's go back. Okay. Right there, yes. Now it still plays out even in the bullish conditions, even though price is clearly bullish, right? It still plays out. Here it is. That day we opened here. Get my line here. We opened here, right? Where's my line? Open here at this price here. Open, right? Then we chose a direction, went up, right? Then we came back down below the opening price, came way below the opening price, right? Okay. Then we went back up here. In this case, we went all the way back above the open again on this candle here, right? That candle went out way up there. Let's do it like this right here, right? We went back above the open again, and then we came back down and we closed below the opening price, right? So we opened, accumulated longs, went up, traded back below the opening price, right? And in this case, right, we traded down, but it was higher in the down. Why? Because we're in bullish conditions. So price is drawing toward the buy side, but even during the bullish conditions, as you see, power 3 for that down close candle, it all plays out. It all plays out. Now, that was just an extra little thing that just popped into my mind while I was in the middle of doing that. Now I can't remember what I was talking about before. Can't remember what I was talking about before. But hopefully that helped somebody. Hopefully that helped somebody. What was I talking about before? Somebody get me back in track. What was I talking about before? Hola. What's going on, Valdez? What's up, Stacks? Somebody get me back on track. Rhonda, Michelle, one of y'all get me back on track. What was I talking about? Not seeing it in hindsight. Are we still bullish even red closed down? Are we still bullish even with the red down close? You let price tell you what it want to do. We let price tell us what it want to do. You don't buck the trend. You don't buck the trend. That's why I was saying I closed out my puts because I saw that the buy program was still intact. Took my profit. Good profit. Even though I had them for out in March. Right? I had them for out in March, but I saw that the buy program was still intact. So I took my profits. It is a good thing I did because where are we now compared to where we were then? Back above the highs. Right? Back above the highs. While I'm trying to remember what I was talking about, right? A good indication of a possible change in trend is when you have a break in market structure, right? And for a higher time frame trend like this bullish trend that we've been in since October, right? See, we've been in a bullish trend since October, right? So since October, and we talked about this. We've talked about this. We were anticipating this, right? We're anticipating this move back up, coming to make all-time highs, right? Price respecting PD arrays. Okay. Oh, where I was. Yeah, no, I wasn't on that. I was a price respecting the PD arrays. I was somewhere around that because we'll talk about anticipating it and not wishing. Right? Anticipating it and not wishing. Right? So that's how that's what we did to anticipate. I was talking about we was anticipating that move up. Oh, looking down. That's where I was at. Appreciate that. Reading the price, looking down. That's what I was talking about. You're looking down for a place to buy. If price, you know what I'm saying? If prices, where were we? That's the candle right there. Let's look at our picture. Yes. Okay, so we had this red candle right here was that little green candle right there at the time, right? Was that little green candle at that time. And on there, I'm trying to see if I can see the time on there. Can I see the time on there? Yes, I can see the time on there. It says 7:47 p.m. Right, so 7:47 p.m. was the time. All right, so this is what we're going to do. We're going to come here. We're going to mark out because we marked out the order block, right? We was talking about the order block, the propulsion block. So we marked out the order block. Okay. We marked out the order block. And then we talked about this inversion fair value gap right there. We got another inversion fair value gap right there. And we got the inversion fair value gap up there. So then those dailies, those are daily. So we're gonna make this gray, right? We're gonna make that gray on the inversion fair value gap. Let's give it a name too. We're talking about looking for a place to, you know what I'm saying, make your decisions. You're looking for a place to make your decisions, right? Look for if price is showing you that it's in a buy program, you always want to buy in a discount, selling the premium. Right? Buy in discount, sell in premium. Buying discount, selling premium, right? That's the rules. Buying discount, selling premium, right? You want to buy when price is running at you like a train, and you want to sell when price is running at you like a train. I know it's scary. I know it's scary, but you got to do it. When you go to Walmart, you looking for stuff on sale. You trying to buy as cheap as possible. Do the same thing in the market. Don't buy when it's treetop tall. Wait for the price to come back down to that discount. And when it's coming down, it keep on falling. It's falling. It's going to be coming at you. Imagine standing out there in the middle of the field and you getting ready to catch that kickoff, and you hear them feet coming towards you, and you just got to stay calm and catch that ball anyway, even though you know somebody running full speed ahead at you. Just got to catch it, man. Catch it. And when you trying to sell something, you trying to sell it above Kelly Blue Book. You trying to sell it high. You want to sell it at a premium. Buying a discount, selling a premium. Remember that. Okay, so now let's put a line right there. Gonna put a line right there because that's the day that we want to look at, because that was that little green day when we were here. It was when we was talking. That's the little green day. Right? And let's mark out this other inversion fair value gap that we have marked out then. All right. Okay, we have marked that out. Now let's go down here and we're going to move time back over. We said it was 7:47, so we're going to move time back. That's 7 p.m. It's 8 p.m. All right, and we're going to go down to 15 minutes, and we're going to move time back to 7 right there. That's close enough for government work. So now we are at 7:45 p.m. Right? We are at 7:45 p.m. Now, if Picasso lives above you, right, you want to look down for a reason to buy. Okay, so when we look at price right here, oh, this is good. Somebody on the internet charge you $19.95 for this. Shout out Wall Street Trapper. Wall Street Trapper say, man, it's somebody on the internet charge you $19.95 for this right now. It's good. It's good. We cooking. We cooking. Okay. So when we look at price, right, we're looking at price right now, right? You want to focus on like the most significant dealer range that we're in. Okay. And looking at price right now, right, depending on what your taste is, I would go from this low all the way up to that high as being the dealing range that I want to see something transpire with. Right? And if you notice, all I did was grab my Fibonacci's. I just looked at price and I said, hey, in my mind, what's the significant price leg? And I went from this low to that high. Where is price consolidating at? Where is price consolidating at? Where is fair value right now for this price leg? If you don't know what fair value is, it's equilibrium. It's 50% of from the lowest low to the highest high of the price leg. Right? 50%. What made me pick that low right there? Because if you notice, we came over here. If we look farther back, we came over here and completed a market maker sell model right there, right? Came down, ran liquidity, and then we expanded up, got us, remember what I said? A high probability of us turning around is a break in market structure, right? A break in market structure is when you go from external liquidity, in this case, this high came down and took out this low right there, right? This high came down and took out that low. That low was external liquidity. It attacked sell side on the outside of a range, right? From this high to that, from this low to that high, right? This sell side is outside of that range. So it went to external liquidity. If you come back and go above that high right there, you are going from external liquidity to external liquidity. So that's a high probability that price is going to turn around. So after we got our break-in market structure, right, we traded back into the range and the buy program ensued. So I came from the low of the confirmation of the buy program to the high, right? And as you see, we're consolidating right around equilibrium, right around 50%, right around fair value. Okay. Anything above that line right there in this price range is in a premium. If you're above this line and you want to buy, you do not want to buy above this line. If price keeps going up, you just wave to it. Bye-bye. Why? Because people are paying too much for it at that time. And you don't want to be people. You want it. Or if you're more advanced, you can look for opportunity to trade against the grain and sell in a premium. But you want to make sure you buy it back when it gets into the discount. You don't want to get stuck holding the bag and getting stuck in a short squeeze. Now, you're looking for a reason to buy. Let's fast forward the clock. Right? Run it up. Fast forward the clock. Run it up. Fast forward the clock. Stop. Hammer time. Hammer time. Let it go on up. Now we'll stop it. Stop. Hammer time. Okay. So, here we go. We got, this is our dealing range right here, right? This is our dealing range right here. So, we come down. The reason why I let it keep going was because, remember I said, depending on who you are, you can go from here. I forgot to tell you it was a second option there too. But that's the reason why I let it keep going, because you got a second option there too. And I'm going to explain that there too. Okay. So price comes down and we get into the discount. Now you just don't immediately start buying, right? You don't immediately start buying just because it get to a discount. You want price to give you a reversal signal. You want price to give you a reversal signal. What did we say the reversal signal was? Somebody put in the chat. What did we say the high probability of a reversal? What was that signature? What was that signal? The signal. What signature in price is that there's a high probability of a reversal? What do we say that was? Oh, this good. Oh, this good. Break in market structure. Appreciate that, Royce. Break in market structure. Right? So we're coming down. We're coming down. If you look at price, you ain't got to have it zoomed in. Right? We're coming down. We're coming down and we're in a discount. Right? We do not see a break in market structure until we get right here. Boop. We got us a break in market structure. Now, your radar has just been set off. It's time to get ready to go shopping, baby. Right? But you don't just trust it. What you want to do when you get that break in market structure, you want to do like Beyonce told Jay-Z or whoever she was talking to. You want to look to the left, and see why did we react in such a way? And that brings us back to this other point down here. Remember that other point, right? When I was like, depending on who you ask, it'd be this one, right? And then, boop, this one here. Why that one there? That's the parent of the entire move, right? This right here is a subordinate swing inside this parent swing. But this one here was after the confirmation. That's why I went to that one first, right? But price, as it came down and completed this market maker sell model, right? When it completed this market maker sell model, right? Where did it complete it? At this original consolidation right there below the low. What's resting below that low right there? Sell stops, right? What are sell stops fuel for? Sell stops are fuel or liquidity for the market to go up. Why? Because smart money is buying in a discount from people who are selling in a discount. They're on the wrong side of the trade, right? And then you also look over here, there are imbalances down here, right? Imbalances down there. So what do we come down to? Let's put us a line there. We came all the way down. If you look over here, came all the way down to the high of a bullish breaker, right? For those who like to see it drawn out, right? We had low, high, low, low. There's our little lopsided triangle. Remember we talk about our lopsided triangle, right? And that's our little lopsided, see our lopsided triangle, right? Broke through that. We came to the high of a bullish breaker. We came to a Bissy, right? Remember, Mijor order block, right? We're staying, the bodies of the candles are staying inside this order block, right? We're staying inside this order block. Now, this is a daily order block, so you want to see how price closed on the daily and compare it to it. But all of these candles, even down on this lower time frame, is staying inside that order block. And then once we do all of that, right, we get us a pang out. Get us a pang out. And we get us a break in market structure right there. That high took out that low. right? That's your break-in market structure right there. And then we got that break-in market structure. What do? We had displacement. What is displacement, Tim? Expansion with an imbalance left behind. Displacement. Displacement. Look at there, right? Displacement. Displacement. Okay? Pang-out, displacement, breaking market structure. Radar going off. Now, you're looking for your setup. You're looking for your setup. Okay. Tim, I trade breakers. I don't care. Find a breaker to buy off of in a discount. Tim, I trade fair value gaps. I don't care. Find a fair value gap to trade off of in a discount. Tim, I trade mitigation. I don't care. Find a mitigation block to trade off in the discount. In the discount of what? The displacement leg right here. Find somewhere below 50% in this displacement leg to buy. And you see this candle here opened up. Where did it come to? Down to the 50%, below the 50%. What did it hit? It hit that order block. What did it hit? It hit that imbalance. Right? Any PD array you want to pick out in here. It hit it. And then off to the races. Golly gee, Williger, this stuff really works. It's easy to look at the chart and say, and just pick it out, cherry pick it. Let's go back to February the 18th at 7:47 p.m. For those who just tuned in, listen. On here, listen. Then close respecting this. This actually a propulsion block. This, right? Whenever you got a propulsion block, you don't want to see price close below the mean threshold. It's a daily candle. Price close above the mean threshold. Closing above. Tap the mean threshold and then took off. Right? Then we disrespected this SIBI and inverted this BISI. Buy program. Right? Both of those is like a bullish move. Bullish move. So that would make me want to see us tap these highs. Tap that high. On 2/18 at 7:47 p.m. We came back into the discount. We touched that propulsion block that we talked about. And we came up and we took out that high. Golly gee, Williger's back, man. We came and touched that propulsion block and we took out that high. Just like he said back on Sunday the 18th. This stuff really works. It really works. If you want to learn how to read price action, just start tapping into the channel starting May 1st. All I'm doing is I'm starting at the beginning. It's going to be, this is a candle. This is a open, high, low, close. This is what this is. And it's going to go all the way through to what we just went through today. But I'm not a financial advisor or a fiduciary. Hey, man. Hey, I got an eye appointment at 2 and I need to eat something. Does anybody have anything for me? Was this helpful to anybody? Did I confuse anybody? Was this helpful? If this was helpful, someone please put something in the chat. If this helped anybody. Rhonda, if you're going to do the notey notes for this one here, I'm sorry I was all over the place. I'm sorry, I was all over the place. I was here, there, everywhere. I was like, grande helpful. That'll be muy helpful. Grande is big. Muy is very. I appreciate y'all, man. That's all I got. Do anybody got anything for me? Do anybody got any questions? I ain't gonna hold you, but that was fine. Thank you, thank you, thank you. You're far too kind. Thank you, thank you, thank you. You far too kind. Shout out the new background, man. I like the new background. I like the new back. I think I did my 1-2 on there. We got Big Spy. We got Spy Lean. We got Spy Lean in here, right? Hanging out with your boy Aranya Grande. For those who don't speak Spanish, if you don't hablo español, I just said Big Spider. Hear me? Hey, I take the fact that ain't nobody dropping nothing in here, that nobody has any questions, concerns, or comments. I take that to mean that all hearts and minds are clear. And I would just say, y'all know who it is, man. It is your boy, Aranya Grande, a.k.a. Timothy Lee Rogers Sr. And until the next time I desire to jump on Al Gore's internet, y'all be safe out here in these trading streets, man. I'm gone. Yeah.